We got some massive news for Nvidia stock investors as the company announced a new product that could be the next catalyst for growth when the artificial intelligence boom starts to calm down. Nvidia stock is trading near its 52-week high, and of course, I'm really happy about that. I bought Nvidia stock myself earlier this year, and I've rated Nvidia stock as one of the best stocks to buy since January. So I'm really happy with Nvidia's performance now with the share price near its 52-week high. So in this video, I'm going to review what this latest product announcement could mean for Nvidia stock investors, and I'll share with you my proprietary discounted cash flow model for Nvidia stock so you can see my fair value calculation, and I'll look at valuation on a forward price to earnings, and I'll discuss how this new product launch plays into the company's valuation and how it makes Nvidia still an attractive investment for long-term buyers. Let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so Nvidia announced on Monday that its latest robotic chip module, the Jetson AGX Store, is now on sale for $3,500 as a developer kit. The company calls the chip a robot brain. The first kits will ship next month, Nvidia said, and the chips will allow customers to create robots. After a company creates a robot, if they want to reach production scale, Nvidia says they can install these modules. If a company needs more than 1,000 of these chips, Nvidia will charge $2,999 per module. The CEO has said, and I've discussed this, that robotics is the company's largest growth opportunity outside of AI. And AI, I'm estimating, has at least another 2 years of phenomenal growth ahead. But starting in that third year, starting maybe 2029, 2028, maybe 2030, the growth rates will likely start to slow down significantly in artificial intelligence spending, at least in the segments that are building the data centers to power these artificial intelligence computing requirements. I expect between 2028 and 2030, the growth rates to slow down, while I do still expect the increases in those categories. I do still think there will be more spending in that category, year over year increases, all the way out to probably 2040. But the rates of increase will likely slow down as the investments start to reach trillions of dollars annually. Right now, we're in the hundreds of billions of dollars annually that's getting spent on building these data centers optimized for AI. By 2030, that might approach 500 billion annually. And so from that point onward, I don't expect to see significant growth in year over year spending in that category. It may flatten out. It may growth in, the low double digit range. That remains to be seen. But this category, robotics, I've been talking about, it could be the next driver for Nvidia going forward. Now, I've calculated an intrinsic value for Nvidia stock at around $156 a share. Current market price is $181 per share. Now, I'm forecasting Nvidia's free cash flows will rise to $65 billion in 2025. And from that point onward, they will continue rising all the way up to $743 billion by 2035. So I'm forecasting significant increases in Nvidia's free cash flow between 2025 and 2035, driven mostly by its artificial intelligence business, the sales into these data centers optimized for artificial intelligence, and then, of course, the replacement cycle, right? Those investments that were placed into operation this year will likely need to be updated every few years. And so NVIDIA will likely gain that market for replacing those chips that were placed into service this year. And then we have the robotics industry, where I see it booming already. Some of the most prevalent use cases right now for the robotics industry is inside warehouses, like those for Amazon and Walmart, in their fulfillment centers, in their logistics centers, to sort and arrange products that are coming in and need to be shipped out. Using robotics significantly lowers the wage expense for these companies that employ over 1 million people each. Amazon has roughly 1.5 million employees. Walmart has over 2 million employees. And a lot of them are working in these warehouses, getting things ready to be shipped out, handling inventory coming in and handling inventory going out. And robotics can help reduce the expense, help improve operations inside these warehouses. Another category of robotics, and if you think about it, a driverless car is a robot, right? It's similar to the robots you see inside these warehouses that go up to a rack and pick up an item and then drive it back to a different location. You can use similar technology inside driverless cars. And even if it's not this specific chip that's going to go inside driverless cars, the advancements in the technology can be used to help facilitate improvements in driverless car technology, which I've been expecting could be another driver for NVIDIA. And I think they're grouping that together when they're talking about their next biggest opportunity. And I see that as the next biggest opportunity as well. When the AI boom starts to level off, that could be that next driver, which increases NVIDIA's revenues and cash flows. Let's say from 2030 onward, right? And then NVIDIA can grow from that point forward. It's already uh, known that NVIDIA has the best in class technology when combining the hardware, the technology, the chips, with the massive software and ecosystem that NVIDIA has built. That's where NVIDIA has the biggest advantages in the combination of the software and hardware that works together to give enterprises the capability to build on these products that NVIDIA creates. And so that can create new products and categories, which facilitate sales moving forward. Now, I also wanted to share with you the valuation on a forward price to earnings basis. And for these valuations, I go to fiscal.ai. They're my preferred data source. NVIDIA is trading at a forward PE of 35 heading into earnings this week. I would say this is a fair valuation for NVIDIA's business. I would say right now, NVIDIA's business is trading at a fair valuation, but it's also an excellent business. And I think investors will do well in the long run if they buy excellent businesses at fair valuations, which is what I feel about NVIDIA stock at current market prices. Now, there's going to be a lot revealed in the upcoming earnings release, so you're going to want to stay tuned and see what NVIDIA reports. I've got a video I'm going to link to at the end of this one talking about what to expect from NVIDIA in the upcoming earnings release, and then I'll have many, many videos coming out that evaluates NVIDIA's earnings update. It's going to be one of the most important earnings updates from NVIDIA going back several quarters now, given what they're going to talk about with their chip sales into China, given what they're going to talk about with their upcoming technology and this new product launch. It's going to be a highly anticipated earnings release. I'm looking forward to seeing what the company reports.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.